information around business, of which this business connection is actually coming to give a lot of information regarding what is happening in the economy in the nation. My name is Kelvin. Obviously, we have actually been joined by Mr. Kabaso. Mr. Kabaso, good evening.
Good evening, Kelvin, and thank you very much.
Thank you so much. It's my pleasure having you.
Appreciate it.
Just a quick kickstart. Mr. Kabaso, I understand that you have taken more time into capital market, and of which we have understood quite clearly that capital market has really been growing from time to time, even from the time when it started. What do you make of the current scenario in capital market?
Thanks very much, Kelvin, and thank you very much for hosting me. For having me on your first show, Business Connection. I think it's a very great show, I must be able to say, and we look forward as listeners and as viewers to get to see how we can benefit. Yeah, but in terms of coming to your question, where are we with the capital markets? So I think one of the first few things that we need to be able to appreciate is where we're coming from. From way back as 1993, when the capital markets were being now transformed to where we are today. And if you have to look at the trajectory of growth from back then to where we are now, there's been quite a huge sort of progress that has been seen in the markets. We have seen both in terms of capitalization, the market has grown. Currently we're talking about the market capitalization to GDP of 15%. Again, that just gives you a sense in terms of, how we're moving up. And then if you have to look at also the sort of regulation that we have seen around, I think it has literally been, improving by the day. And we are where we are today with a very more enhanced sort of, our regulatory environment as well as legal. And then the other elements that we need to be able to appreciate is that we've got a very enhanced also skill sets that are coming up on the market, and different sort of products are being, enhanced, and we're seeing quite a lot of different sort of things that capital market players are doing on the market. So I think in a snapshot, I think the markets have literally transformed from being an infant market, and we're moving in the right direction in terms of being a frontier market, maybe in the next 1 or 2 years. So again, it just helps one to appreciate that we're moving in the right direction, and I think the sort of plans that we've set for ourselves and what we aspire to do as a country and as a market, we're seeing ourselves moving there.
Tell me something. What could have prompted Zambia to actually have the even gotten to a point of regulation? What could have actually caused to this level? Do you think capital market has really given a lot of impact in that sense, having regulation also coming afterward?
I think, answering your question, we need to go back to basics. Why are the capital markets there? So they are there for obvious reasons to bring savers and borrowers together. So the very fact that we have had an economy that has been, moving forward with respect to its demands, it becomes very ideal that we also move alongside to kind of equip everything that we are able to do on the market to those particular aspirations. So if you have to look at, the sort of GDP growth that we've had in Zambia, coming back from the early 90s to 2000s to where we are now, our GDP growth has been averaging about, say, 5 to 6%. And now we've come down. But we've come down, it's still an aspiration within the 8th National Development Plan for us to be able to seek up in terms of GDP growth of about 4%. And for us to be able to file up and get those particular deliverables right, it basically means that we need to have suited platforms that can then enhance our growth. So,
tell me something about the growth that we have seen over time, from the time when the capital market was enacted, even through the parliament. What has really given to where we are? Do you see there is a growth pattern being projected in this case?
I think there's a huge growth projection. I think one of the few things you can look at is when the Securities Act was appealed in 2016, and then it had a lot of refinements around it. And those refinements were speaking to some of the things that were salient in the previous and the initial, Securities Act. And the whole essence why we are kind of appealing it or amending whatever sort of act we had before was because certain enactments within that particular initial act was not speaking to the aspiration and the ambition that we had, and also looking at how the global capital market environment is moving. So with these refinements, we are literally speaking to the growth that we aspire for, and we also want to speak to fundamentals in terms of where are we lacking in terms of our law, and where are we lacking in terms of our regulation, and then refine whatever is there now to speak to the growth that we're looking for. So if we look at even the refinements that we've been seeing in the recent year, we're able to see further refinements that we're speaking to in the initial act and also in the amended act of 2015. Now we're including more sort of, wider breadth of what you can be able to do. So that growth is actually there.
Let me ask, do you think the capital market master plan is answering to such questions? Because obviously we are also looking at the Lusaka stock market or exchange to have its own regulation process as far as it's concerned. Do you think it's having that harmonization together with the SEC?
Yeah, I think it is. The capital market master plan, I've always said, is like a roadmap, to our promised land of where we want to be with capital markets. So if we have to look at what sort of enablers were put in the capital market master plan, it's things that we ourselves as practitioners, together with the regulators, have come through together and said, look, as a consensus, we do not have these, and we have to aspire to have these. If at all, we have to benchmark ourselves on international markets. So one of the aspirations that we have is being a frontier market, and within the capital market master plan is an aspect of us being able to drive ourselves towards being a frontier market. And there are very specific milestones that have already been set and included in that capital market master plan. So if we execute this particular, deliverables and we get to these particular milestones, then we'll see ourselves benchmarking ourselves with markets such as those which are already in the frontier markets. And that also raises a profile of what we want to do as Zambia. And then we can then be able to easily attract capital into Zambia and then even broaden the sort of development that we're talking about right now. If you look at FDI has gone down. And partly the reason why we can say foreign direct investment is coming down is, every capital that comes in-house has to find a home. It has to find somewhere where it can sit. So if our capital markets are not developed, where would you want to see FDI sitting? So if we develop the base, in which case we develop the home, the capital market environment is developed, the regulatory environment is developed, the legal environment is developed, then even individuals who are coming to invest in Zambia are going to find need and reasons for them to be able to come into the country.
Tell me something. I'm looking at maybe somehow becoming a little bit of a tricky situation for people to understand. Yes, so is there a way maybe it could also come down to a point where we say who should be in the market to participate in the capital market? Because obviously that has been information that has been lacking most of the time, and we've seen a very wide gap in this case. So who can clarify to say should be able to trade on the capital market?
I think the good part of it is that, for any market to be efficient, it has to be very inclusive. And being inclusive, it cuts across all different sectors and different sort of personalities. Okay. So for this market to grow, it's not going to be segregated to a particular niche of a market. I think it's everyone else's, participation. So we're talking about both corporate organizations, we're talking about retail. All of us have to participate. Now, if you have to think about just maybe one area of the retail participation, we have oftentimes gotten to see that our markets are not responsive to some of the macroeconomic fundamentals. Okay. And partly because the cadre of individual investors that are on the market probably are not very responsive. But if we get a lot of participation in the market, we also raise awareness and accountability from individual entities that we have invested in.
Okay, as a matter of peculiar interest, what do you clarify to be the minimum cost for one to venture with or to venture into? Obviously, we are looking at a possibility of getting a number of people to actually venture into capital market as one of the financial solution that could be able to help them at some point. Yeah. So what could be the minimum cost that one can incur to just come on the capital market, particularly on the stock market, if I may put it in that way?
Yeah, I think that's quite a very wide-ranging question to answer. But I think what would determine how much you're going to spend will primarily be dependent on how much money you want to raise. Okay. So if you come to market and you want to raise 1 billion, and someone else comes to the market and raise 500,000, so the disparities in terms of the quantums will also determine how much money you're going to start off.
Maybe we take it on the retail side at individual level. How much does one need to have to participate on the stock market? Yeah, I think that's what most of the people are liking right now, yeah. And we need to find a way in which we can disseminate information regarding this, so that we know how we can help those who have got money holding the house to actually, put as an alternative, package in terms of saving, in terms of investment as well. What do you make of this?
Well, I think the good part of it is that coming into the capital market as an investor, you can start from as low as 1 way.
Okay.
You know, one way can get you to start in buying shares or investing in any company.
And where do they start from? Maybe that's also an interesting component as well.
Yeah, I can imagine, right? So I think starting is very easy. We've got a very straight-through process in terms of how you can get to invest.
Yes, sure.
So you have got your brokers that can then assist you to get to, you know, invest in any particular entity of your choice that you want to invest in. So those ones will lead you through, because that's the process that we have on the market now, that you cannot invest straight into Luce without going through the broker. So the broker becomes the first point of call. But it is also very critical for you as an investor to understand what you're doing, because, you know, getting to invest without knowledge sometimes becomes the most obvious, you know, detriment that we have seen in most markets.
Mr. Karaso, I'm beginning to wonder in this case, why is that banking and finance sector only in the traditional banks or banking in its own form, the only one who have actually got these financial resources which are quite prominent, and everyone knows that if you want savings or investment or anything around, I would love to go to a bank. But why can't we look at capital market to be also the same way we take the bank?
Yeah, I think, you know, it has to do mostly with the aspect of not having enough, you know, education, sensitized across different boards. If you have to look at the sort of, you know, catchment businesses that you're talking about the SMEs, you know, the medium cap businesses, or even the blue chips, for them to be able to come on the market, it has to start with more or less like that self-awareness in terms of what can they do with the market. I think the cultural shift in terms of where we get money should also be something that is embedded in us, be it maybe at our conversation as peers, or even at business level. I think the most easy route that most people want to take is, let me go and get a loan from the bank. I think the aspect of being able to get equity, you know, has not yet been fully socialized, and partly because, again, you know, debt might be easier to get at onset but more expensive over time, and like equity, which might be quite onerous at the beginning but quite cheaper over a passage of time.
Sure.
So I think we just need to be able to get the right sort of, you know, mindset in terms of individuals getting to realize that equity might be cheaper in the longer run than getting debt. I think what mostly scares people off is, you know, will I lose control of my business? Will I lose control of my patents? Which oftentimes does not happen, because you won't be the one to determine how much capital you want to raise compared to how much you've already pumped in yourself. And then obviously things to do with controls are things that you can also be able to look at as good governance, because you cannot be an individual who controls an entity from start to finish. You need to be able to have public participation for you to be able to broaden the base. And I think that's where we're lacking. Most businesses are failing to get even to medium cap, because oftentimes we linger around just a small medium enterprise because we own the patent, we own the business. The thought of even sharing my business or my capital with anyone else becomes something that scares people off.
Yeah, just hold on there. You see, people want to come on the stock market, even when you're running an outfit, be it a corporate outfit or whatever it is, you want to basically come into capital market to actually raise some capital. But because of the process that is involved, don't you think this has actually become a bit of an hindrance for some of these SME or enterprising companies to come on the stock market?
Well, I would not say that. I think to a very large extent there's a process is there for a good reason. I don't think anyone just dreamt of having a process and then just inhibits growth. If you ever thought about the process, they thought about the reasons why. And sure. I think it's from that background that we need to be able to appreciate where we've got controls in place or where we've got the processes in place. If we water down these processes, the chances are going to have is that our businesses will not be able to get the value out of the market.
But why is it that even when we have these controls to safeguard the assets or investment, there is none looking forward to come on the stock market to start interplaying to that, except the big companies like, we've only got about 24 big companies which have actually been there for some time. Don't you think we need also to steer the spirit of enterprising through the stock market so that we can raise capital, broaden the base, as you are saying?
Yeah. So I think it's a good thought process that you have there. But I think, like I said earlier, if we do not get our mindset right to get to realize why am I getting equity and why is it cheaper than getting debt, we will not be able to see that activity. The other element that we also need to be able to work on is just just working around our own housekeeping rules as business owners, because there's quite a lot of businesses that can make use of the market, but oftentimes they reach a snag where they cannot be able to proceed and get to access funding, because no one is going to give you funding for the sake of giving it to you. Everyone else is giving you money once a return in return. So if I'm going to give you money, I want profit out of it. And even you, as you're getting into the market, you want to get money which is cheaper for you to be able to make more margins and then be able to pay me back my equity at some point if I want to exit, and should be able to expand your business. But the gist is, if you come to the bank today, the banks are also desperate to be able to grow their book. They want to grow loans. Okay. So if you come here today, they're desperate to be able to lend you out the money. And hence they'll be able to guide you through in terms of the process or do ABCD. They'll probably even get to, help you to be able to get to qualify to get a loan. But I think that's where maybe as market practitioners on the capital market side, we probably have not taken so much deliberate effort, because helping individual businesses to qualify must be something that we take personal. Because if I want you as a small business to come on the market, then I have to be able to take you through the steps, and get you there. But oftentimes, I think, like I said earlier, it's a very cultural sort of mindset where you say, look, if I'm going to go on the market today, and my business has, moves from Nicholas and Sons to become Nicholas public entity, it becomes a bit of a bother. And the very fact that not a lot of people understand the clarity between debt and equity, oftentimes again hinders people from coming actively on the market. And just the whole process around how I can get myself to list, to disclose what it is I'm doing, disclose my patterns, who am I working with, who is my board, and those elements. Those are things that kind of deter people from get on the market, because you become public. And if you become public, everyone else wants to get to see who you are. So you're literally going to undress yourself for obvious reasons to give us everything else in terms of what is happening in your business, for me to be interested as an investor to be able to give you the funds. So I think if we get the mindset right, that the process is for the good of you as an individual business owner, it will then help more people to come on the market. Otherwise, the potential for them to get cheaper funding is there. The only process is the beginning, which obviously becomes too onerous for many. But again, over the passage of time, you don't pay interest on your loans, it's equity. So they're just helping you to expand your business operation. So that is basically what we need to get right across the different mindsets of our businesses.
Okay, now coming back to the legal framework, obviously we know that the capital market master plan is speaking to different areas of interest and looking at trying to stimulate growth pattern for SME as well as corporate outfit in terms of financial resources, and also projecting Zambia to actually have a better understanding of how we can diversify the economy as well as part of the key component in this case. Do you think we are headed for a good growth with the plan itself?
I think it is. I think if you have to look at the legal environment, I think it has advanced in with a lot of feedback that has been given back to different sort of jurisdictions, be it the Law Association of Zambia, even the regulators themselves.
But does it have communication needs to ensure that it pushes the necessary information in the public? Does it also has some composition of education as well in schools and other institutions of higher learning? Do we have such kind of element stipulated into the same?
Yeah, and I think the beauty that you should be able to appreciate also is that if you have to look at where we're coming from and where we are now, a lot of work has been done to even cascade some of that information to the grassroots, even to individuals that might be able to find information right for use. If you have to look at the schools, the ones that you have highlighted, we have got a curriculum that has been very explicitly highlighted to deal with how they can get into the markets and participate. And then if you have to look at the next tier of individuals, those who are coming into employment, maybe first-time individuals, several platforms have been initiated by the regulator as well as by the associations like the Capital Market Association, which are just basically in charge to disseminate information to help you to make informed decisions. And then if you come to practitioners, we also have got the mandate to be able to help individuals to come on the market and be able to understand what they're doing. As part of the requirement of us as individual practitioners is a need for us to be able to give full disclosure to individual entities that are coming on, and also help them to fully understand what it is that are getting themselves on. Okay. So if you look at those, sort of platforms that we're using, we've got, I think, sufficient buffer to be able to help us to get the information out. Okay. And I think the licenses that are also being awarded by the regulator are awarded on the premise that you, as an individual practitioner, are going to abide by the rules and by the rules of that particular license. So if you're giving the wrong information out, then that license is at stake of being taken out. Sure. So the very fact that there's stringent sort of regulation around even how our licenses are being upheld, helps us to be able to get the information out right. Sure. And I think we are positioned and poised to be able to see the growth, because now we've got enough caliber of individuals. We just have to keep on growing to help us then to be able to scale up from where we are in terms of market capitalization to GDP. Okay,
so now looking at the aspect of trying to champion economic direction of trying to bring this diversity of financial aspect in this case, obviously we know that people have actually been oversupplied into government securities. And the capital market master plan is coming to incentivize some good element here so that we can remove the crowding out effect. Yeah. Do you think that this is going to help, looking at where we have burdened the government securities? Do you think the capital market is posed to help even the current situation that we are facing as a nation? Do you think it can help?
Yeah, I think it is. I think it's a very good a question you're posing, and I think if you have to look at even the current state of situation, the president has made it very clear that as part of his mandate is to lower the cost of funding. Now, the only way we can bring down the cost of funding is if we avoid overcrowding. Now, overcrowding comes in for told the government is excessively on the market. So if they become the dominant borrowers on the market and they're like the easy target for most investors, then the cost of funding can literally be very high up. But now the steer that the current government has is that we're going to bring it down, meaning that we're going to have not so much play on the local market, on the domestic market, so we'll not be borrowing much. So the moment that they kind of stick to that, the fiscal discipline comes in, and we've got a bit of more, sanity around how the public fiscal is being managed, it then becomes easier for us to then be able to see what are the alternative. Even for me as an individual investor, I'll be looking for where else can I take my money, and I can take my money to the equity markets, and those equity markets, remember, they are always negatively correlated with the fixed income markets. So once the cost of funding comes down, the active participation by most people, including both corporate and retail, will be letting send their money into the equity market, because now the equities will come up. Okay. And they will come up because participation is going up, the economy is doing very well because the cost of funding has come down. And if the cost of funding has come down, the projection across most of these sectors or entities that are listed on the market becomes positive. And so as long as the positive sentiment across the performance is there, then the participation goes up and even the share pricing goes up. And those are things that we start seeing now coming up on the market. But as we see it right now, if the cost of funding is high, it basically means then that for me to be able to pay my debt, I have to have a cost, a profit margin that will be way above the cost of borrowing, And if I took an average, cost of funding of about say 25%, yeah. You're talking about a business that's going to have a profit margin of about 30% or more for them to be able to make, reasonable margins for them to pay back the debt. But how many entities are those going to be? So I think it's those sort of dynamics that we need to be able to rationalize through and be able to appreciate that for us to be able to develop alternative markets, in this case, alternative securities market, we have to be able to deliberately drive down the cost of funding and then scale up, participation into other securities markets. And I think that's what the equities market are literally, hanging on to now, right?
Okay, now looking at the individual performances of companies on the stock market, do you think that we have posed for growth as a nation? Are we posed for growth in terms of what is happening right now?
I think it's a positive, yes. In terms of the question, we can say that it's a positive, outlook in terms of where we're seeing most of these things. Like I did mention earlier, the performance was only bad during the COVID times because I think globally and locally we felt the impact of COVID-19. But now coming post-COVID, we're seeing now positive performances across the economy, and that is trickling down to individual performances of sectors. Remember that the economy does not exist on its own. It exists within sectors. Yes. The sectors are the individual hands that are pushing the economy up. Yes, sure. So if the positive outlook of the economy is there, we can expect that even the markets will perform. Yes. All right. So if you have to look at some of the key sectors that we have, we've got agri as a a focus area now. We've got some of the very beautiful stocks that have been listed on the market. The outlook remains positive.
Yes, sure.
We've got the mining sector, we've got the the manufacturing sector, we've got the retail sectors.
Yes.
All these sectors are looking up because there's a positive outlook in terms of the GDP.
Yes, sure.
So as long as the economy is moving, we can definitely be assured that there will be that positive effect in terms of the performance of the market. But obviously, the overhanging crowd will always remain the public debt that has to be resolved earlier than sooner than later, and for obvious reasons, because we are not the only participants in our market. There are also other offshore players that are coming on the market, and some of them are looking at different sort of tenets that they can use as a benchmark to be able to participate. And obviously, what is hanging over us is now how we're going to resolve the issue of debt, because if we don't deal with this public debt, then it becomes a hindrance in terms of how the volatility and the FX might be, or just what will be the direction of FDI in terms of going forward, and that may have a bearing in terms of inflows of FX, and that is also going to have an impact in terms of my FX position, because I'm investing my dollar into your market.
Sure.
If there's volatility on the FX, then I'm going to be seeing myself losing ground both against capital gains and against valuations. So I think it's those elements that we have to be able to deal with, but the outlook remains positive.
Okay, thank you so much. It's quite elaborate information and quite exciting moment as well. Yeah, dear viewers, we have reached a point where we need to also get to hear from your side, just to see how we can interact from this. We're going to give you a line in which you are supposed to give us a call so that we can just be interactive. I'm sure you're able to see the line that is scrolling on the screen. We'll be able to interact and dissect some of those questions. I have Mr. Kabaso here. We'll be able to see how best we can work it out. Yeah. So, Mr. Kabaso, before we have any caller coming through, do you think the overall plan that we are looking forward from maybe Lusaka Stock Exchange and also from SEC, are they projecting to do something strategically good in terms of capturing the retail as well? Because you see, the retail is one area which have not been able to do quite well. Even when they have initiated the app, not so much is being used so much in that regard. Do you think the app or the market outskirts of Lusaka is also responding to the need for investment on the stock market?
Yeah, I think one thing that we need to be able to highlight is that there could be gaps in the way the communication is being cascaded. Others have talked about, can we get information into a layperson's way of understanding? Can we get into local languages? Can we be able to speak about all these things in such a way that even my grandmother in the village can then be able to understand? I think those are some of the gaps we've identified, and some of them have been dealt with. If you have to look at the way information has been cascaded, some of the leaflets that we have about the markets have been translated into some of the local languages. We may not have all the 72 languages transcribed, but we've got quite a huge chunk of the popular languages already transcribed in terms of their local language. Yes, sure. And I think the other element that we have to do is, we have to be able to look beyond Lusaka, which is, I think, is a valid point that you've made, because I think the catchment for us, even as practitioners, is around the capital city. Yes, but there's a huge potential for us to be able to get out in the outskirts, in the rural areas, because these are individuals. Say, for instance, if you go to Namwala, there are people who are literally, keeping cattle and have got huge chunks of capital out of it. Where can they take that capital? So I think it's from that perspective that if we can also find a platform through which you can then get this media in, then it can help us. It can help us to get there.
Okay, we seem to have a caller. Can we get, yes. Yeah, we've lost that caller, unfortunately. Mr. Kabaso, can continue.
So I was saying, so we need to still find a lot of use for even the digital platforms that can allow us to be able to get individuals to use their mobile phones, for instance, to be able to participate. Yes, a lot of companies have been raised around the mobile app to get to participate on the Luce, but I think those are elements that I think are still work in progress, and I think most of them have been highlighted and closed out, but there's still some of the teething problems that we have. But that is already a very great platform that we have to allow individuals to be able to participate. The other initiative that we have is being able to come up with retail bonds. Now, retail bonds are individuals now using your mobile phones, like I think we've seen our peer markets. Yes, sure. Individuals are able to buy, government bonds just using their Airtel money or MTN money.